Hello and welcome to Explain the Charts, where we take a look at the market news and the chart data to see what they tell us about the current market. Today is October 17th, 2024, and we're taking a look at the USDJPY pair. Let's dive into the latest news from Google Search. Google Search data indicates a weakening Japanese yen, JPY, against the US dollar, USD. Carry trades, where investors borrow in low-interest rate currencies like the yen and invest in higher-yielding currencies, are fueling this trend. The interest rate differential between the US and Japan, with the US Federal Reserve cutting rates while the Bank of Japan maintains its ultra-loose monetary policy, is also contributing to the yen's weakness. The recent US retail sales and jobs data have strengthened the US dollar, further supporting the USDJPY's upward momentum. The USDJPY has surpassed the 150.00 level, hinting at a strong US dollar. However, technical indicators suggest that a clear break above the Ichimoku cloud is needed to confirm the uptrend. The RSI has cleared the last three peaks, indicating that buyers are gaining momentum. We'll now turn our attention to the chart data to see what it tells us about the current market and the possible future trajectory of the USDJPY pair. We're starting with the daily chart, which shows a clear upward trend. The USDJPY has been steadily rising over the past several months, indicating strong bullish sentiment. Let's zoom in on the last few months to get a better look at the recent price action. The pair has broken through several resistance levels, indicating strong bullish pressure. The most recent resistance level was around 149.50, which the USDJPY has now overcome. This suggests that the bullish trend is strong and there is potential for further upside. We can also see that the USDJPY has formed a series of higher highs and higher lows, which is another indication of a bullish trend. This strong upward movement is likely driven by the combination of carry trades and the interest rate differential between the US and Japan. The current economic news also reinforces the bullish sentiment. The US dollar is strong due to positive economic data, and the Japanese yen is weakening due to the Bank of Japan's ultra-loose monetary policy stance. We'll now switch to the 1-hour chart to see if we can find any short-term trading opportunities. This will give us a closer look at the recent price action. Here on the 1-hour chart, we can see a more volatile price action, as we would expect on a shorter time frame. The USDJPY is currently trading above the 150.00 level, which is a significant psychological resistance level. However, it's important to note that there has been some recent consolidation, which suggests that the bullish momentum may be slowing down. We can also see that the USDJPY is approaching the 100-day moving average, DMA, at 150.85, which could act as a resistance level. If the USDJPY breaks through the 100-day DMA, it could see further upside. However, if it fails to break through this level, we could see a pullback or a period of consolidation. This short-term volatility is likely due to the anticipation of the Bank of Japan's next monetary policy announcement. If the Bank of Japan signals a shift towards ending its ultra-loose monetary policy stance, the yen could strengthen. This would likely cause a downward correction in the USDJPY. Let's move to the 15-minute chart to see if there are any more immediate opportunities. Finally, we're looking at the 15-minute chart, which provides us with the most granular view of the price action. The USDJPY is currently trading above the 150.00 level, and we can see that the price is consolidating. This consolidation suggests that the bullish momentum may be slowing down, and the price is likely to move sideways in the short term. We can also see that the USDJPY is approaching the 100-day moving average, DMA, at 150.85, which could act as a resistance level in the short term. If the USDJPY breaks through this level, we could see a short-term rally, but it's important to remember that it's still consolidating on the 1-hour chart. Therefore, we should wait for a clear breakout before considering a bullish trade. If the USDJPY fails to break through the 100-day DMA, we could see a short-term pullback. This pullback could provide an opportunity for a short-term bearish trade, but again, it's important to remember that the USDJPY is still in a long-term bullish trend. Let's summarize the key price levels and the conditions that might affect their likelihood. The 150.00 level is a significant psychological resistance level, which the USDJPY has already surpassed. The 100-day moving average, DMA, at 150.85 could act as a resistance level in the short term. If the USDJPY breaks through the 100-day DMA, we could see further upside. However, if it fails to break through this level, we could see a pullback or a period of consolidation. The Bank of Japan's next monetary policy announcement is a key factor to watch in the short term. If the Bank of Japan signals a shift towards ending its ultra-loose monetary policy stance, the yen could strengthen, causing a downward correction in the USDJPY.